Hi guys, welcome to another episode in our short sales series for Treg TV. I'm Scott Hazard.
And I'm Dan Ford, and together we sell homes for happy clients along the Wasatch Front.
Okay, so today we wanted to talk about deficiency facts. Define deficiency for us, Dan.
Deficiency is when you owe this amount and you get a payment for less than what you owe. That delta between the two of what you owe and what you're actually paying through the sale of your home is called a deficiency.
So say I owed $250,000 on my home, but I only got $160,000 for the home. I'm going to make you do math here.
$90,000.
So I got $90,000 left over that the house didn't pay for. What happens to that $90,000? Legally, just because I sold the house does not mean that I don't still owe the money. I do still owe the money, right?
That is correct. In fact, Utah is a right to contract state and a full recourse state, which means that if you owe that deficiency of $90,000, the bank can come after you for it. This is one of the reasons why you need to have a real estate professional to help you when you do a short sale, is to navigate some of these pitfalls and help negotiate these deficiency judgments so you don't owe $90,000 at the end of the day.
So if the bank comes after you, they sue you for deficiency judgment. They look for their judgment to reimburse them for the deficiency, if that makes sense. So let's talk about a couple of facts. One is, you don't have to have a deficiency judgment. There will be a deficiency in a short sale because we come up short. That part short is called a deficiency, and you don't always have to pay the money back, do you?
Not always. The bank has a few options with them legally. They can either come after you and sue you for a deficiency, and they can go ahead and file a 1099, which is basically saying that you're going to claim that on your taxes. It will look like income on your taxes. Now, there was a federal law that was done through the IRS about these deficiencies in 1099s. Do you want to explain that for a second?
Sure. And let's start with 1099. That's an IRS tax document that they issue to you. You claim that deficiency as income because you got the money, the lender didn't get it back, and that's their way of writing it off. However, currently, for your own personal residence, you can take that and you should check current IRS guidelines or talk to your CPA, whoever does your accounting and tax preparation, to make sure that you're staying on top of this, because the legislation is pretty fluid on this right now. But you can claim it. You actually report the deficiency on your tax return, but then you get to forgive it. So you don't actually have to pay taxes on it. You report it, but you don't have to pay taxes on it.
That's correct. And there's always talk about what they're going to do with that. Now, different states handle it differently. Right now, the state of Utah, do they claim that as income?
They don't. You still report it, but you don't have to pay taxes on it as if it were income.
Now, when you have an experienced negotiator negotiate a short sale with you, the bank is going to issue a letter when they go to closing. Now, you need to watch for this. They have all kinds of verbiage that says a debt's been satisfied for less than it was owed. It can say, I don't know, there's a whole list. There's a satisfaction of debt, account settled, satisfaction of mortgage balance.
Lender won't pursue you.
There's all these different things that you can look at that are important. And it all depends on the lender that you're working with, and it depends on the experience of your negotiator as well, on whether you're going to get the satisfaction of debt issued to you at the time of closing.
Folks, hopefully that clears up for you a little bit about how deficiency is handled and what it means. Again, just more points saying that you need a strong negotiator to make sure that you're taken care of. And just so you know, just because a lender doesn't pursue the first mortgage, you might have a second mortgage lien holder that might pursue you. So make sure that your negotiator, whoever you're having handle your transaction, hopefully it's Scott and Dan, but make sure that they're handling both mortgages to make sure you're protected on both of those financial encumbrances.
Now, a typical question too I've had is, can a bank 1099 you and sue you for a deficiency? The answer is no on a single particular loan. They will typically either 1099 you or they will sue you for that deficiency. On a foreclosure, they can sue you for the deficiency for 90 days. State law, they're looking at changing this. They can do a short sale seeking a judgment or deficiency for up to 6 years. But if you've received that 1099, that means that they've already relieved and discharged that debt.
So Dan, on the hundreds of short sales that we've processed here at the Real Estate Group, how many of our clients have been sued?
Not one.
And that's because we take care of the paperwork, we negotiate hard for our clients, we'll negotiate hard for you too. Stay tuned for more information in our short sales series. I'm Scott Hazard.
I'm Dan Ford, and together we sell homes for happy clients along the Wasatch Front.